Pence, yesterday another bank came into problem, and that is nothing that Credit Suisse. Now we just spoken about SCB Bank, but slowly and gradually many more banks are coming into picture, and they are having a more financial crisis. So yesterday night only, if you are aware that Credit Suisse issue was floating around the news, and no, the problem is that no, they are in a big problem, and they are currently actually taking a loan of $54 billion from Swiss Central Bank to save themselves. So guys, today we are going to talk in detail about what happened to Credit Suisse, why it is falling so much, and what is the problem. Yesterday it fallen more than 25%. So okay, friends, welcome back. My name is Tapan Doshi, and I welcome you to my YouTube channel. So you know that almost 5 days back, the SVB Bank, that is Silicon Valley Bank issue was there, and crisis happened. And now after that, another bank, cryptocurrency bank, nothing but Signature Bank, and another cryptocurrency bank got busted. Now because of that also, there was already a lot of strain in the US banking sector, and of course US central banker came to save them. But now the issue is created in Europe also. In Europe, you know that Credit Suisse, which was already there in the problem from last so many years, their financial condition was not great. But suddenly yesterday there was a big drop in the share price, almost more than 25% drop in the share price. The reason was that Saudi National Bank, who is one of the major holder in Credit Suisse, told that they are not going to up their stake in that stock. And the reason was simple. They told that it is a regulatory issue. They cannot up more than 10%. That is why they are not bringing up that basically stake in Credit Suisse. Now, after that news, suddenly the stock fallen a lot, and also there was a lot of strain in the Credit Suisse because of the way they have landed. They have a wealth management also. They are doing research also. So many things are there. But then basically Swiss Bank, Swiss Central Bank came into action, and actually Swiss government, of course, they will not allow Credit Suisse to fall, because if you talk about Credit Suisse, it will be the biggest fall after 2008 Lehman Brothers crisis. Correct? The magnitude of the way bank is, and of course, central bankers will never allow that. So Swiss Central Bank given a loan of almost, you can given a borrow money, basically Credit Suisse borrow money of $54 billion from them, and this is what actually there was a treaty with the central bank that they can borrow up to this one. So now they have borrowed. So it is like no, just a lifesaver. I think it will not make a difference. Otherwise, see, if they do not borrow this type of money, or central banker do not give this money, Credit will get bankrupt, and this is what central banker in you basically in Switzerland do not want, and that is why they are giving that loan. But see, the problem is created why? The problem is created because suddenly from the zero rate regime, which was there from last few years, not few years, even for more than a decade, suddenly this interest rate has gone up quite a lot. After that geopolitical crisis, you know that no, because of the Russia-Ukraine crisis, suddenly the metal prices, oil prices gone up. As a result, inflation gone up, and so the central bankers started increasing the interest rate, and that is having a complete reverse effect to the banks. There basically what is, there is a basically liability mismatch, because when they give loan, they'll give loan for 10 years, but the deposit they may give, you have to give back in 1 or 2 years. And if the person comes back and to want to have a take back their deposit, they have to honor that. Correct? And this was the problem happened in SAB. Even Credit Suisse, same thing happened. The problem is in Credit Suisse is that the companies who is giving a loan to most of the businesses and the retail and many other corporations, there the Europe condition is also not so great, and there is a repaying problem. People are not paying loan on time, and you also know they are in a literally a recession after that war, and that is having a very big impact in Credit Suisse. Anyways, it was not at all in a earlier a good condition. So now, as I told you, central banker has a two options: either they allow it to fall or they save them. Currently they try to save that, but this shows that yes, there is a systematic problem happening in bank and across Europe and in US also. Now, can we consider a start of a systematic risk, or the systematic risk also started? What is a systematic risk? Systematic risk is nothing but when one banks fall, the other banks follow the suit. Now, is this happening in USA, Europe? that we have to think about it. Currently, it does not look like a systematic risk because credit was already earlier in a problem. Of course, there are a lot many things that changed afterwards. Even Moody's has told that US banking sector, they have notched down their rating from stable to negative. Now, all this why they are doing? They are doing because they can see the strain in the banking sector. So currently, what is happening? All these banks are literally, is being safeguarded by the governments. But how many banks the government can save? So there is an issue, a big issue at a European level. However, in India, the things doesn't look so bad. In India, of course, we had our banking crisis like Yes Bank earlier and all that. But after that, RBI has maintained the situation very well. Even all the banks in India are very well capitalized, and the way they are giving loan, it is not like a haphazard. And currently, see, understand one thing: we always been there. Our inflation was always around 6% to 5%. So it went up to 7.8. So it was not a big deal for us. And interest rate, high interest rate scenario, anyways, we are dealing from last few decades. But this European countries has never seen all this type of scenario. And now as the interest rate is going up fast, no, the situation is happening worse and worse in US and Europe. So one has to understand what type of risk these banks are carrying, and if this risk will continue, then we have a big problem. Currently, if you talk about yesterday, yes, the things are being settled, but the problem is that how much it is settled. Is there any more skeletons lying in the banking sector which may come up anytime? So currently it is situation every 2 days we are hearing new banks which is getting collapsed in USA or in basically Europe, and that is what we have to consider, that kitna chalega ye sab. Okay, for if you see the our market also beating up because of that, and see, understand we cannot be lone over here, we'll also go down along with that. But the thing is FII are going out like anything, वो लोग बाहर ही निकल रहे हैं. Because see, understand one thing, when the problem is like this, no, FII wants to go to the safety, and the safety lies in USA, correct? So FII are going back to the safety, and they are selling the stocks in India, and they are going back, and this is what is happening across globe. Now it is a situation, it will remain until the banking sector gets stable. But one good thing is that because of this problems, no, it may happen that European central bankers, even the US Fed, no, they may stop increasing the rate, or they may come with a dovish commentary next time. When I think for US Fed it is on 22nd, they come up with a dovish commentary that, boss, it's enough now, we are not going to increase the rates. Or basically, no, they may increase 25, but they make their commentary very dovish, then it will be very good for the market. But the best scenario is if they cut the rate. See, understand, if they cut the rate, then the bond issue will get resolved. Suddenly, the bond yield also gone down a lot. You can see 3.5 and all that level it has gone. The reason is simple, because of the fear in the market, the problem which is happening in the market. Now, if US Fed cuts the interest, I think that will be the best scenario for US market and globe across, and that is what we are thinking on. See, Powell is always a rigid and to cut the interest rate because he wants to kill the inflation. But what he told earlier, that either the inflation should come down or something should break. Now here the banks has break. So let's see whether the Powell is coming up with a policy much more dovish, and which they are saying that you don't have to worry, we are sitting here, we'll help you out. Currently, US central bankers is giving assurance to all the depositors and everyone that you don't have to worry about it. But as I told you, market is not relying on that. Market, the way market is behaving, the way market is falling, of course, it is in an oversold position. But yes, there is a fear in the market. Unless the Fed or central bankers, or in Europe also central bankers do not increase the rate or the cut rate. Otherwise, then the situation will remain same only. And I don't think the bullishness will come in the market, or market will take a breather. See, market will take a breather when they feel that yes, the things are stable. Now the situation is not so bad which they were thinking earlier. Now the basically the banking sector has a backing, and all these things you have to keep in mind. This plays a very big role. See, at the end, as I told you always, now you have to see the global at the end of the day. We are not alone. So unless something happens there, which is no somehow safeguarding the investors and retail investor there, I think here also situation is not going to change fast. So guys, this is the thing I wanted to tell you today. Let's hope no more skeleton come out from this banking issue which is happening in US and Europe. Okay, so guys, thank you very much for joining, and I'll see you next time.